You're being robbed by one thing every indicator trader is told to trust: the default settings. It looks harmless, it feels safe, but it's quietly draining accounts every single day. Most traders are not losing because they are careless or emotional. They're losing because they're reacting to signals that were never designed to work on their own. They see a color change, they click, and by the time they realize what happened, the trade was already stacked against them. The real solution is not more indicators or faster entries. It's one adjustment almost no one talks about. Stay with me, because everything you're about to see works if you understand the part at the end. Look at the chart. Right here, the line tells you direction. The oscillator tells you force. This is it, nothing more. And this is exactly where most traders fail into the trap. This is where the damage begins. Traders isolate information. They stare at one signal at a time and treat it like truth. The line turns green, so they buy. The oscillator flips, so they react. Green means go, red means a stop. It feels objective, it feels clean, but this mindset is what pushes traders straight into chop. When you trade signals in isolation, you're trading momentum without context. Watch the market when there's no real direction. Price drifts sideways. Candles overlap, nothing actually progress. In this environment, indicator flips constantly. Green, red, each flips feels like opportunity. In reality, this is just noise. This is not bad luck. This is the market doing exactly what it's designed to do. It slowly extracts money from traders who can't sit still. Signals without direction are not opportunities, they are traps. This is why the first real upgrade here has nothing to do with entries. It is protection. The goal is not to trade more. The goal is to stop trading when the market is not paying. And that comes down to understanding a strength, not just direction. The oscillator uses three colors for a reason. Green means buyers are in control and momentum supports continuation. Red means sellers are in control and downside continuation makes sense. But slow down here, because this is the part most traders ignore. The most important color on this entire chart is white. White is the market saying stay out. White means indecision. When you see white, your trade is no trade. Traders who ignore this are not losing because of bad entries. They are losing because they traded when doing nothing was the edge. Now watch how this plays out on a real chart. The line on price is green. Candles are forming above it. Direction is locked. The market is in an uptrend. Because of that, sell trades no longer exist. No reduced, eliminated. This one filter removes a massive amount of losing trades before they even appear. Now patience take over. Price is not chased. We wait for it to pull back toward the line. This is where weak hands exit and strong trends breathe. This is the discount zone. Entering here improves risk and reward, but only if a strength remains. So as price pulls back, your focus shifts on the oscillator. This is the momentum check. It must stay green. Green tells you the pullback is corrective. White tells you a strength is fading. This is where the most traders fail. They see white and convince themselves it will turn back. That single decision is how clean setups turn into losses. If the oscillator stays green, attention moves to a structure. The most recent swing high before the pullback matters. That level represents prior resistance. We mark it. And now comes the hardest part of this entire process. We wait. No early entry, no anticipation, no guessing. This pause is what separates consistency from gambling. The entry only happens if price breaks above the level. The break confirms buyers have a step back in and push price beyond previous resistance. And that exact moment, the oscillator must still be green. Direction and force must agree. If they do not, the trade is a skip, no exception. Risk is handled before emotions gets involved. No trade risks more than 1% of the account. Losing trades are unavoidable. This rule ensures they're survivable. The stop loss goes at the most recent swing low. This is where the idea is invalidated. The target is set at 1 to 1.5 times the risk. This is how probability works in your favor over time. Now think back to the ranging market from earlier. The oscillator was right. That one condition kept you out. By doing nothing, you avoided losses before they even happened. This is not luck, this is a structure. If you're still here, you understand the logic. Now you get the keys to engine. Everything before this was necessary so you do not misuse what comes next. The signal generator used here is the trend speed analyzer by Zierman. This part is non-negotiable. The maximum length is set to 90. The accelerator is set to 7. The lookback is set to 200. Those values are what separates noise from usable information. The trend filter is MACD 4C indicator. The fast moving average is set to 100. And the slow moving average is set to 300. In the style settings, the type is changed to area, and the colors are green, white, red, and white. This transforms it from a basic indicator into a true strength filter. Apply this exactly as shown. This approach works because it is aligned, disciplined, and selective. It keeps you out of bad trades and focused on the ones that matters. Leave early and you miss the only adjustment and makes the whole thing work. Happy trading!